Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty, and I am back with your local real estate news for South King County for the week. I'll go ahead and jump right on into these slides. So today is September 30th, 2022, and let's find out what happened this week. Today is Blue Friday. I got my colors on. The Seahawks will be playing at 10 a.m. on Sunday against the Lions, so make sure to tune in and check that out. I know I don't talk about Mariners very much on this show, but as of tonight, if the Mariners win, they could be going to the playoffs. Last time the Mariners were in the playoffs, I was 15 years old. So it's been a while, and yeah, that could be really exciting. Who knows? Maybe Seattle will become a baseball town again. This was a long streak of not being in the playoffs. So go Mariners. And let's find out what happened this week. Okay, so this week I have been chatting with a potential seller who is looking at selling his home. And most of the people that are selling their homes right now tend to be people that need to. For one reason or another, they need to move out of town, or they have a family life change of some sort. And that is the case for this individual as well. So he needs to sell his house. And he's trying to look and see if now's the right time, or if there's any way he could hold off until interest rates come back down, if that's going to make a big difference. And really, I don't have a crystal ball. I don't know what's going to happen with interest rates necessarily. I have an idea of what I think might happen, but the timeline for that is up in the air. I don't know when rates will come back down or how high they will go before that happens. So this is something that's been kind of weighing on the minds of both buyers and sellers. Should I wait to make a move until interest rates come back down? Let me tell you, you are not the only one with that idea. So right now we are seeing a decrease in prices because homes are less affordable because of the higher interest rates. When interest rates go down, there's going to be a flood of people that re-enter the market, and those home prices are going to get bid up again. So if you can possibly buy a house right now, now is a really great time to get in, even though the rates are high. There are ways to get that rate down. So reach out and we will go over your particular situation and what is right for you. With the higher interest rates, there's less demand for each home. And that means the overall prices are decreasing. If you get into a home at a lower price, but a higher interest rate, when interest rates do go back down, you can refinance and get into a lower rate with that lower debt amount, overall debt amount. So keep that in mind if you are looking at making a move this year, whether you want to buy or sell or make a transition. There's a little bit of a lull right now, which if you play your cards right, really could be to your benefit. So reach out and we'll have that conversation. Remember, I was gone last week, so we are rewinding for the past 2 weeks, covering the past 2 weeks in this little update. The Fed attacks inflation with another big rate hike and expects more. And this article came out 10 days ago. The Fed raised the rate another 0.75 points. So this is looking kind of like we are headed down a little bit of a rough road for the short term here. The Fed raised their rates. They control the rates that banks lend to each other. Right now, that rate is 3% to 3.25. And that's the highest rate since 2008. But they're looking at reaching 4.4 by the end of the year. So that looks like another few hikes are coming. And then 4.6 by the end of next year. So that would be the highest level since 2007. And this is going to be probably a little bit of a rough road in a variety of ways heading forward. This is a quote from Powell. If we want to light the way to another period of a strong labor market, we have to get inflation behind us. I wish there was a painless way to do that. There isn't. And the Fed they're trying to hit this soft landing, but it's starting to look a little bit like that soft landing is not going to happen. There was kind of a split of economists thinking that the Fed was doing the right thing and versus the Fed is going to cause a recession. And more people are swinging over to the Fed is going to cause a recession side of things. And I'm pretty sure the Fed is aware of it because of these quotes about, I wish there was a painless way to do that. There isn't. So hopefully things don't go too bad before they get better. But I do think that there is a little bit of a rough patch ahead for our country. Seattle area home prices take biggest monthly tumble since 2009. This isn't too surprising, seeing how high home prices went in January, February, March. Like, that was crazy. So the fact that we were seeing a greater tumble in prices than we would normally expect to see this time of year, because remember, seasonally, we would expect to see a decrease in prices starting around this time of year. However, it started a little earlier and has been a little bit more intense because our pop-up in the spring was for winter, I guess, was a little bit more intense than we would normally expect. Seattle area home prices in July were still up compared to last year, but have fallen since this spring. Single family home prices were up 14.5% from last July and down 3% from June. This shows that we're still, overall, homes still have more value than they did have last year, but there has been a bit of a slip. In Seattle, that was the largest month-to-month drop since January 2009. The pandemic really set off this real estate boom, and that brought bidding wars and soaring prices, and really it sent the real estate market through this red hot roof. It was crazy for a little bit there. So now that the interest rates are up, demand has definitely come down a little bit, or as they say in this listing, collapsed. There's still a lot of buyers out there. Technically, we still are in a seller's market. It's just not swung as far in that direction as it was the last couple of years. But we have seen a decrease in sales of previously owned homes for 7 months now. And Seattle is America's fastest cooling housing market, according to Redfin. So this is analyzing King County. Basically, they're taking King County into consideration here. Last month, King County pending sales were down about 27% compared to last year. Although, as I said, our median home price is still up because we were at 89999. It's still up from 2021, but has dropped 10% from May to August on home values. And here's that chart. San Jose actually looks like it's kind of cool and a little bit faster than Seattle does, according to this chart, but they definitely popped up a little bit more violently than we did earlier this year. You can see that our home prices have started to ease, but it's not like bottoming out. But on a $775,000 home in the Seattle area, the typical mortgage payment would be around $3,300 at 3%. And $4,400 at 6%. So $1,100 a month increase within a few month period. That's pretty significant. That's knocking people into different categories of homes that they're shopping for. If you're shopping for, a $500,000 home, maybe you're looking at a condo now. That's kind of the reality of it. But we have fallen pretty fast. So I do feel like here in Seattle, we're poised to make a comeback pretty quickly compared to some of the other big cities they mentioned in this article. But to show how the market cooled off, the report compares those indicators in August with the same figures in February, because in many places, February was when things kind of peaked. So here, this report is looking at right now compared to February and comparing those metrics. In Seattle, home prices were up 15% year over year in February, and in August, they were up just 7% compared to a year earlier. Might I remind you that 7% year over year appreciation is still pretty darn good. We have seen a significant pull off the market from where we were in January and February. But if we weren't coming off that, and we just looked at this month, we'd still think that things are pretty strong. So there's a couple different stories going on here for sure. But the number of homes for sale was down 36% in February. And that's not because there's a ton more listings coming to the market. It just they're sitting there for a little while longer. But buyers who are purchasing homes right now are doing so with inspection contingencies and finance contingencies and all these things that they were like, yeah, forget it. I just want the house in January and February. The market that happened back then is a market that creates a lot of lawsuits. There's problems when you go and buy a house without really taking a good look at it. That's not always a smart decision. So I think there is a trade-off for buyers, even though there are higher rates. Home prices have come down a little bit. So the overall debt is smaller, and you have a little more leverage with the sellers to get some more buyer favorable terms in the offer. And that brings us to our market stat minute. We had 808 new listings in King County in the last 7 days, 645 pending, and 622 sold. So did tick down in our new listings and in pending sales. Listings sold remained fairly consistent from a couple weeks ago, but that is a lagging measure because those homes went pending a month ago. And if we bring it to our local breakdown, in Auburn, we had fewer new listings than pendings. And in Renton, Kent, well, Kent's pretty much neck and neck. And then Federal Way, in Renton and Federal Way, we had more new listings than pendings. But let's take a minute to look at the price reduced. The third row down here, list price reduced. This on all 4 of these charts is the biggest number. So that means that sellers they put their home on the market and it wasn't selling, so they chose to bring the price down in hopes of attracting a buyer. And that looks like kind of what we're seeing on the market right now, is a lot of price reductions. And last time we were here together, the interest rate had hit 6%. And this said for the first time since the housing crash, but we know that happened a couple months ago for a second, but it just didn't hit the weekly average mortgage rate. This week, we are at 6.7 for our weekly average mortgage rate. Last week was 6.29. And as I said before, the Fed did bump up that benchmark borrowing rate. So this is exactly what we would expect, is to see interest rates head up a bit. So this is an instant reaction from mortgage rates from the National Association of Realtors. I thought this was a really great line to show exactly what is going on. Mortgage rates rose by more than 1% in September. According to Freddie Mac, the 30-year fixed mortgage rate increased to 6.7% from 5.66 in the first week of September. As a result, home buying is 12% more expensive now than it was a month ago. In other words, current buyers need to spend about $250 more per month to buy a median priced home compared to the buyers who purchased their home 1 month ago. And this is a national article, National Association of Realtors. So our average home sale price in this area is double approximately what it would be nationwide. So $500 approximately. Everybody's loan product is different, their situation is different, but $500 a month difference in a single month, that's unfortunate. That's a lot. And so unfortunately, that is going to knock a few people out of the home buying market until interest rates come down. But like I said, when interest rates do come back down, we are going to have a flood of buyers hitting the market. So prices will go back up. We'll see when that happens, though. So I'm a huge nerd over these candlestick charts. As a real estate agent, I don't get privy to these very often. These are more of a mortgage lender thing. but this was a mortgage update from a local lender, and the red means that things are headed down, and the green means they're headed up. So this is for the mortgage bond, and as this goes down, interest rates go up. Now we're expecting the mortgage bond to go back up a little bit. So in the short term, we may see a little bit of relief on those interest rates, but who knows how long that will last, because it looks like the Fed is going to continue their rate hikes going into the future. But the green here is good economic news or high inflation, which is bad for mortgage interest rates. Bad economic news or deflation is good for mortgage interest rates. This came from that same mortgage update. The only other time in history that kind of sort of barely holds a candle to what we're going through right now saw mortgage interest rates rise 64.14% over the course of 2 years. But that was in 1981 and has been gradually declining for 40 years now. So we've been in really low interest rates for a very long time. The interest rate increase that we have seen now, 115.43% increase in mortgage interest rates in 9 months. And that is pretty big shock for people that were shopping before that, and they're just priced out of a home now. There's a good chance that could be the story for a number of people. However, like I said, please reach out. There are options to get that rate down. There's a really wide variety of loan products, and we will find the one that's best for you. This past Monday marked the actual worst time in history for mortgage interest rates. The good news is that investors do not think that this will last for long. As discussed above, they're literally betting on rates falling and people refinancing. So this is the light at the end of the tunnel. It's not thought that rates will be very high for years. They'll come down in the next year or year after, and people will be able to refinance. And showings, you can see the showing traffic has ticked off at a greater rate than it has the past couple of years due to that spike in interest rates. And if you are looking to make a move this year, please let me know. I would love to get you one of these buyer or seller guides, or both, depending on your situation. These have so much fantastic information that's just super relevant to right now. So let me know how I can get this to you, and I will send it your way. If you have questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you might be interested in. So please reach out, text me, call me, DM, email, doesn't matter. Let's have a conversation. So till next time, I'm Sarah Eggleston with Stone Egg Realty at John L. Scott, signing off. I'll be back here next week at 3 p.m. with your local real estate news. Have a fantastic week, and go Mariners!